Yo, what is up, everybody? Welcome back to V Trades. Look, today we're going to do something a little different. I get asked all the time about my exact day-to-day routine. Like, what am I actually looking at when I sit down at the charts? So I decided to just lay it all out, no holding back. I'm going to walk you through my complete top-down analysis, literally from the daily chart all the way down to the execution. Because honestly, most people complicate this way too much. They have 50 indicators on their screen and it's just noise. For me, it's all about time, price, liquidity, and a strict, almost robotic risk to reward ratio. So grab a notebook, get your coffee, whatever you need to do, because we are getting deep into the weeds today. Let's get right into it. All right, so step one, everything, and I mean everything, starts on the higher time frame. For me, that's the daily chart. If you don't know what the daily is doing, you have absolutely no business executing on the 5-minute period. So when I open the daily, the very first thing my eyes go to is candle closures. Specifically, I'm looking for C2 closures. I want to see that clear structural continuation. I'm not guessing if a wick is a reversal or not. I want the bodies to tell me the story, right? And from there, it's all about the draw on liquidity. Where is the market reaching? I map out my internal range liquidity to external range liquidity, and obviously vice versa, external to internal. Because price is just a delivery algorithm, right? It goes from one pool of liquidity to the next. I'm also paying close attention to order pairing ranges. Like I'm marking out range low to high or range high to low. If we sweep a daily range low, I am immediately asking myself, okay, are we pairing long orders here to send price back to the internal range high? That daily bias is the anchor for the rest of the entire session. Once I have that daily narrative, I drop down to the 4-hour time frame. Now, the 4-hour is where things start getting a bit more precise. This is where I'm looking for the institutional footprint. What I want to see here are key levels. I am hunting for high probability fair value gaps. But I don't just trade any random FVG. I mean, there are gaps everywhere if you look hard enough. I need confluences. I'm looking for S&T divergence. I'm looking at PSP. And I am highly focused on cracks and correlation. Like if I'm looking at ES and NQ, and let's say NQ makes a lower low into a 4-hour fair value gap, but ES fails to make that lower low, boom, that's a crack in correlation. That S&T divergence gives me the confidence that smart money is accumulating right there at that key 4-hour level. Okay, so now we have our daily bias, we have our 4-hour key levels and confluences. Next, we drop to the 1-hour chart. On the 1 hour, I am strictly looking at intraday structure. I am trying to answer one very specific question. Has the high or the low of the day formed yet? Think about it. If my daily and 4-hour bias is bullish, and we've already had a morning sweep that created what looks like the low of the day, why on earth would I be looking for shorts? The 1 hour tells me where we are in the daily cycle, and based on my higher time frame bias, it tells me where price should logically lead to next. It keeps me on the right side of the tape. Now here's where the absolute magic happens, the 30-minute chart. This is all about the opens, time and price, guys. If you don't understand time, you're trading blind. I am watching the 8:30 a.m. and 9:30 a.m. opens like a hawk. Here is my exact rule-based logic for this. If the 8:30 open manipulates, meaning it drops down, sweeps liquidity, and traps retail, then I want to see the 9:30 open act as the expansion candle. But let's say 8:30 is quiet and the 9:30 open is the one that manipulates. Then I just sit on my hands, wait, and I want the 10 a.m. candle to be the expansion. My entire goal, my only job as a trader in that moment is to align myself with that specific expansion candle. Once the manipulation is done, I want to ride the expansion back in the direction of my 1 hour and 4 hour bias. All right, let's talk execution, because all this analysis means nothing if you can't click the button properly. I use a very specific narrative to entry fracture. If I am using the 1 hour narrative, I drop all the way down to the 5-minute chart for my entry. If I am using the 30-minute narrative, I refine it even further and use the 3-minute chart for my entry. I wait for that CISD change in the state of delivery on the lower time frame inside my higher time frame POI after the time macro has manipulated. And finally, let's talk about the thing that actually keeps you in this game: risk to reward. I am extremely strict about this. No emotions. No, let's see if it runs a little further. I keep my RR to a strict 2R, period. Risk 1% to make 2%. You know, sometimes people get greedy and want those 1 to 10 bangers, but a strict 2R keeps my equity curve smooth. It builds consistency. Hit the 2R, close the laptop, and walk away. That's the business. So yeah, that is exactly how I trade. Daily for the draw, 4 hour for the levels, 1 hour for the structure, 3-0, minute for the time manipulation, and the 5 or 3 minute for the trigger. Let's apply this model to a live example. We begin, as always, on the daily time frame. Look at the structure. The market has expanded heavily to the upside, but algorithms do not expand indefinitely. We are anticipating a new phase of delivery, either a consolidation or a deep retracement. What we get is a sharp, aggressive daily candle shifting downward. This validates the retracement phase. Our objective for this session is simple. We are going to drop down and trade the internal delivery of this exact downward candle. Dropping down to the 4-hour chart, we profile the structure. Look at the absolute high of this leg. We have a clear PSP, a precision swing point accompanied by a massive rejection. That PSP formed exactly on the 6 a.m. candle. The high is locked. Because the 6 a.m. candle established the structural high, we are anticipating the 10 a.m. candle to deliver the downward expansion, but we do not guess. We need a bridge to safely execute this bias. We step down to the 1 hour and 30-minute timeframes to read the time-based sequence. Look at the 30-minute chart. The 8:30 a.m. driver opens and aggressively manipulates price upward. It engineers a trap. Because we have 0 higher timeframe alignment supporting higher prices, we know exactly what this is. Since 8:30 delivered the manipulation, we anticipate the 9:30 a.m. and 10 a.m. macros to deliver the heavy, true expansion to the downside. Now, we align ourselves with the expansion. We drop to the 5-minute chart for execution, directly paired with our 1-hour narrative. Watch the 10 a.m. open. The candle opens, wicks up to trap late buyers, and violently closes below the previous up-close candle. The displacement is confirmed. We position ourselves immediately at the open of the new candle. No hesitation, pure mechanics. The position is live. The take profit is a strict 2R, resting exactly at the sell side draw we marked on the higher timeframes. Watch the delivery. Price moves smoothly and aggressively into the target. 2R is extracted. You read the daily phase shift, you confirm the 4-hour PSP, you wait for the 8:30 manipulation, and you execute the expansion. To understand every mechanic behind this model, the VTrades A to Z series is now available. I am releasing these episodes step by step, taking you from absolute zero to advanced execution so you can actually digest the information and apply it mechanically to your own trading. This framework is heavily rooted in the T-Trades, fractal model, and GXT concepts. All credit goes to my mentors, but it is refined, filtered, and executed entirely in my own way. Access to the complete series comes at a small price. specifically designed for those who are actually serious about building a mechanical edge. Master the sequence. Execute flawlessly. I will see you in the next one. Peace.